Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage, and welcome to a 1 Minute Monday. Now, if you're finding these updates helpful, please like and subscribe. And if not, I don't know, feel free to share them with somebody else who might. That's a big win win for both of us, isn't it? So, here's your quick rundown. For my friends that just want to know what time it is, the government finally reopened, which means that we're going to start getting all the delayed jobs, inflation, GDP, and housing reports, all of which will heavily influence the Fed's December 9th and 10th meeting. Now, ADP's real time data shows that we lost an average of 11,250 jobs per week in October. That's a big red flag that the labor market is cooling. So, home prices gain momentum, though. ICE reports a 0.15% month over month increase, and annual appreciation, it's ticking back up too. Retail sales rebounded in October after September's dip, and mortgage rates are near 2 month highs due to, well, let's just say it like it is, some unfriendly Fed speeches, and actually the economic boost from the government reopening. And today's national average for Mortgage News Daily, well, they're right here. Check them out. Just a quick heads up. The BLS report, this thing hits Thursday at 8:30 a.m. after the government being shut down all this time. If it matches ADP and there aren't any big upward revisions to the June or July numbers, rates could move positively really, really quickly. So stay close Wednesday and Thursday because, frankly, it could move either direction pretty quickly. Now, for our new refi alert, if your interest rate is above that 7.25 mark, you are most likely officially in the no points refinance zone, or it may be time to start optimizing your credit and or debt ratio so that you're ready when rates do hit the point that it makes sense for you. I'm always glad to help with that. Now, that's it for everybody who just wants to know what time it is. Let's go ahead and move on to my friends that like to know how to build the clock. Let's dive in. So, of course, the government reopened. What happens now? Well, this was the longest shutdown in U.S. history. It finally ended on Thursday. And yes, last week I had to throw myself on the sword and tell everybody that I screwed up the prediction because I predicted the government would reopen the prior Thursday. So I was off by a week, but at least I nailed the Thursday. So this actually means that, like I said, the BLS data, BEA data, other agencies are going to actually begin releasing the backlog of critical economic data that the Fed needs. And like I said, it matters because the Fed's going to use that data at its December 9th or 10th meeting. And Fed Chair Powell already said that there's no risk-free path forward, meaning that the committee is really heavily divided. And a December rate cut, he said it in the press conference after the last rate cut. He said a December rate cut is far from a foregone conclusion. Well, that's what gave us the higher rates that we've got now, but that's where he stood. Now, markets are starving for real data, which is why the Thursday BLS Jobs Report at 8:30 is huge. Now, if this thing confirms ADP's weekly numbers of 11,250 jobs lost per week in October, and if they don't revise the June or July numbers upward, I am not holding my breath on that one. It could be very good for rates. A cooler labor market equals less inflationary pressure, and that equals happier bonds. So, yeah, stay close to me Wednesday and Thursday. Or again, check out the Shoemaker Loan Team on Facebook. I post a lot of critical real time updates there as well. Now, for the labor market, ADP's monthly number, they're expecting an addition of 42,000 jobs. Now, that looks modest, but it's fairly steady. Now, their new weekly data points a very different picture. Like we said, 11,250 jobs lost per week through October 25th. That is meaningful cooling. And if it lines up with what we've been seeing beneath the surface for months, bond markets love weaker data, which is why Thursday matters so much. Home prices are heating back up as well. The ICE Mortgage Monitor reported that 0.15% increase month over month. That's the biggest since March. And annual appreciation rising after 9 months of slowing. Cotality actually now predicts a 4.1% appreciation in the next year. For a quick example, on a $400,000 house at 4% appreciation, that's $16,000 in wealth created in 1 year. Wow. So this is actually why homeownership is still one of the biggest, best long-term inflation beaters out there. So retail sales rebound too, with the government's official reports delayed. NRF filled the gap. 7 of 9 retail categories actually saw gains in October. Consumer spending is still resilient, but remember, More spending usually equals more demand, which usually equals higher prices, which usually equals inflation pressure. So, folks, throughout the holidays, enjoy yourself, love your families, but boy, be careful what you're spending. Now, for the technical picture this week, and what I mean by that is mortgage backed securities and the 10-year Treasury. Mortgage backed securities ended the week between support at 100.71 and resistance at the 50-day moving average. Now, the 10-year Treasury, it broke above its 4.126 ceiling, which we were not wanting to see. It met with the next resistance around 4.163, right at that Fibonacci level. Now, if Thursday's jobs data disappoints, we actually could drop back below those ceilings, which would help mortgage rates in a big way. Now, I've been asked a lot lately, why in the world are we near 2 month highs after the Fed just did a rate cut? Well, three really big reasons. The first one we talked about a little bit earlier when nobody was really thinking of this. The government reopening, that helps the economy. A long shutdown hurts growth. Reopening removes that drag, and that actually pushes rates up. The second reason is very, very tight range. So we're in such a narrow band with what rates have been doing that even small movements push the 30-year rates into 2 month highs. The third reason is that Fed officials were shockingly unified this week, and none of it was rate friendly. Like, we heard inflation's too high, we heard the labor market is balanced, we heard it's premature to expect a December cut, or policymakers aren't restrictive enough. This was one of the most anti rate cut stretches of Fed commentary that we've seen in a really, really long time. For the rate update and for lock and float guidance, again, the 30-year conventional, it was right at 6.38, 15-year at 5.86, and the 30-year FHA did drop below 6%. We finally got to 5.99, and VA is at 6.01. As I said, that's been a very tight range. We haven't seen a whole lot of movement the last couple weeks there. For float or lock advice on purchases for this week, just stay really close the next few days because it could go either direction and it's probably going to happen fast. So, if you haven't locked, be ready. Now, also, I said this earlier, if you're not familiar with the Shoemaker Loan Team on Facebook, make sure and check me out there because if we do get any alerts to lock or anything like that, I'll usually post that real time data there to get it out as quickly and easily as possible. So, for refinances, timing's a little bit less urgent, but if you're on that edge of benefiting, let's say right now you qualify for that refinance, the monthly savings is a big benefit to you. Well, if an eighth of a percent, if rates went up by an eighth, it no longer benefits you anymore and it could wipe out your whole reason for refinancing. Well, you might want to go ahead and talk to your lender and go ahead and get it locked or make sure they understand what's going on with the market because if they go the other direction by an eighth and it's another 6 months or a year before that comes back, man, whatever that savings was, that could have been $100 or $200 a month over the next year that you could possibly miss out on. So if your lender's not watching the market that closely or they don't really have the skills to do so, give me a call. I'm more than glad to give you some advice there and help you kind of talk and walk through your situation. So for the weekly refinance alert, like I said earlier, 7.25. That's kind of where we're at right now for the people that are benefiting from a refinance with no discount points. That's what's most important to me for you right now, because it usually takes 3 to 5 years before the monthly interest savings of the lower rate pays what you had to pay to get the lower rate when you're doing discount points. So discount points is when you pay extra money to buy down your rate. Now, most time lenders aren't really explaining this to you. They just send you that loan estimate and hope you understand it. But I will tell you, it is not a good time to pay discount points in most cases. So if you have questions about that, make sure and reach out. I'm glad to walk you through that. But if you're thinking about refinancing and rates aren't quite where you want them to be at, as I said earlier, now is the perfect time to optimize your credit or maybe lower your credit utilization or pay down some revolving debt. You could maybe remove some old disputes if you have any, but you want to position yourself for the best tier pricing when rates do drop. Remember, when the national average says 6 point blah, 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 that's assuming 780 credit. It's assuming you've got great debt ratios and a bunch of other things. Don't wait for the perfect rate only to find out you don't have the perfect credit score to get it. Credit improvement can take 30, 60, 90 days or more. So let's go ahead and get started now. And remember, credit repair is not just for people with bad credit. Since the loan level price adjustments changed last year and it now requires that 780 just to get the best rates out there, credit repair is for everybody. So, hey, I love the holidays and all the amazing food that comes along with them. This week hack is actually cranberry nut loaf, and it's super easy and perfect for fall. It may be at my Turkey Day dinner this year, as long as one of you guys drops one off. So, the full recipe is in the YouTube description below. All right, friends, that's your full breakdown for the week. If you're military, law enforcement, or a firefighter, remember the Home Foundation and the Hero Focus savings we offer every day. And if you're not a local soldier, officer, or firefighter, you still get to benefit from the system that we've built for our heroes. That means that you're going to get weekly updates, night and weekend availability, a stress free, education based process, and a team that's going to be here with you for many years to come. I'm Doug Shoemaker, and I'm here to help.